Hi everybody, welcome back. It's your boy JP Broken Finances, and I'm here on our second week of working through this journey to financial freedom, talking about where we're starting at, right? So last week I gave you guys kind of an understanding of where we're going and what the point is of this channel. This week we're going to go over some numbers and we're going to talk about where I am actually starting on this financial journey. I'm going to go through what my some of my assets are. I'm also going to talk a little bit about what my take-home pay is and how I'm actually going through allocating that to various funds, bills, fund money, all that other stuff throughout the month. So stay with me. It might be a little bit dry, but you guys will actually get to understand a little bit of what I'm doing and how I'm doing it and how I'm taking the excess money that I have and trying to apply it smartly to various investments. Okay, so what you're looking at right now is essentially a breakdown of my monthly income and my monthly bills. So the income is obvious. That's at my job, my take-home pay is approximately $3,070 every 2 weeks. Like we get paid bi-weekly. What's not seen in there is the fact that one of the things that I have opted in with my particular job that we're able to do is called a deferred compensation account, and essentially it's almost like a separate 401k where I am able to take money out of my account, out of my paycheck prior to taxes, and invest that money into a separate investment account that's separate from like my pension or my retirement plan that my company pays into. It's actually a really good deal. I have the ability to increase the amount of money that I put into it. Right now, I'm only putting in about $200 a month. Before I had kids, I was putting in about $400 a month, so it's actually built up quite a bit. I'll show you. I'll break that down as part of my assets as well as how much money is in that account. Underneath that, you'll see what my monthly bills are. So, as part of my monthly bills, the largest portion of bills that you're going to see in there is going to be my mortgage, which is about $3,000 a month. I'll talk to you a little bit more about some of the changes that are coming to that. My cell phone, and my wife's cell phone payment, I pay for that. It's $185 a month. Our internet utilities, our internet is around $75, $80 a month. Our utilities, I usually pay more into our utilities because sometimes it fluctuates, right? So depending on the time of year, our utility bill is higher or lower. Generally, it sits at around 75 to $100 a month. I put in 150 a month. Our car insurance is $120. I usually put $120 in a month. I have student loans, my student loan debt. It has been deferred since I believe it was March of 2020 when the federal government started to defer all student loans because of COVID-19. Normally, before that, I was paying about $500 a month. I have continued to make payments since March of 2020, and I have actually paid off, I think, around 3 different loans. So then we have our water and our garbage. I usually throw in about $150 a month. I do martial arts, and so as part of that, it's usually the payment is about $140 a month. And then we also have a car payment because we just purchased a new car, and that payment is $320 a month. My wife pays $100 of that, and I pay 220 of that. So those are our monthly bills. In total they come out to around $4,594 a month. When I subtract that from my monthly income, it comes out to about $1,500 is what I have left to invest. Oh, I'm sorry, I forgot to included in that 400 or in that $4,594 is food, groceries, right? So I actually subscribe to a food service, a meat delivery service, and then once every 2 months or so, I'll go to Costco and get like snacks and sides and stuff for the girls and for myself and my wife. And that bill actually comes out to about $300 a month. But because of the excess money that I have, as far as paying for, you know, as far as not paying for groceries and things like that, it actually slowly builds up so that I do take a little bit of a hit once every 2 months. So once every 8 paychecks, I'll end up having to go forward and pay a little bit extra that month for groceries, right? All right. So now what you guys are looking at right now are my debts, my long-term and my short-term debts. You see there's a sad face, right? We don't really want to have debt. We want to wipe out as much as we can, because when you wipe out your debt, then essentially all the money that you're making and that you're earning is yours now, right? It's not money that's going to somebody else or some company or whatever. Essentially, what I'm lucky enough to have are basically four debts, right? You see, I have my long term and I have my short term. Okay, so we'll start with the long term, right? $500,000. I have a $500,000 debt, and that debt, it belongs to my mortgage. Okay, like I was saying, I live in the Bay Area. Houses are expensive. The prices are going up right now. It is January 17th, 2021, and house prices are just continually going up, right? They're skyrocketing right now, especially since there's low inventory and the interest rates are going down as well, right? When you have interest rates going down, generally that means house prices are going to go up, right? They have an inverse effect. Now, the next thing that you're going to see on there is my student loan debt at $22,000. The last thing on there that is $20,000. That is the new car that me and my wife purchased. Now, what you're seeing over there is on the other side of the beautiful whiteboard is the short-term debt. Now, that short-term debt is my credit card debt. I only have one credit card. I only operate with one credit card. I've always only had one credit card. Actually, no, I take that back. I have a second credit card, and that is just an emergency one. I don't even I never use it. It is solely in case something's happens, some sort of emergency happens, and I need an influx of money. My credit card debt is actually a little bit higher than what it normally is. Normally, my credit card debt is around $200. I try to keep it there so that it can help with my credit score, and I pay it off every month, right? But a couple of things happened. So it's January, right? We just got done with Christmas. Also, in November, I don't know if you guys knew this, but the PlayStation 5 was released, and I was lucky enough to be drawn by Sony to pre-order my PlayStation through their website. So I was able to get my hands on a PlayStation 5, and when I bought my PlayStation 5, I realized that I needed a new TV as well. So November and December were very, very expensive months for me. It is a rarity that I ever buy anything like that for myself. I think the last time I spent that much money on myself was maybe 6 years ago. My credit card is reserved for monthly reoccurring payments. We have Netflix, because we have the girls, we have the Disney package, which has Disney, Hulu, and ESPN. I also like to watch UFC fights, so every once in a while I'll order a fight off of ESPN. And then we also have HBO Max. I really like the movies that HBO Max comes on or has on their streaming channel. So we have those are our three streaming things, and then I also our groceries are actually also on my credit card. Like I said, I do that meat delivery service, Butcher Box. I'm a big fan of it. As far as the long-term debts go, you guys already saw that I actually have those built into my monthly payments, and my short-term debt is something now that I am constantly focusing on. Last week, when I was writing the script for this week, my credit card debt was actually at $4,000, but I ended up paying off another $1,000 on that, and it actually dropped it down to about $3,000. So that is one of the targets my financial freedom right now, right, is to eliminate that short term debt, right? It's a yearly thing. It usually holds me back for about a month or so because that's what I'm focusing on, because I'm trying to recover from Christmas. All right, let's move on to something a little more interesting, a little more fun. Let's talk about the assets. Okay, so what you guys look at now are what I would consider assets. So, I'll start with the passive assets, and then I'll talk to you a little bit about the active ones, which are the ones that I think are going to be more beneficial to people that are coming to my channel because it's what I'm going to focus on the most as far as growth and as far as aggressiveness. Okay, so my passive assets, I have about $26,000 in a investment group called Edward Jones account. I call it passive because it is basically an investment into the Ameritrade mutual fund. Steady growth, not aggressive, very safe, and I don't manage it. The next thing is that $60,000 is the deferred compensation I told you guys about. That is the money that I am able to invest before taxes are taken out of my paycheck. I'm only putting in about $200 a month or $200 a paycheck, so it's $400 a month. I've been doing that for the last 6.5, 7 years. So active, $15,000, and that is in my stock market account that I set up with Ameritrade. Number underneath that, I got $3,000. That is actually $3,000 in cryptocurrency. So, I am by no means an expert on cryptocurrency, but when I started to invest in cryptocurrency, it was around November, and maybe it was a little bit earlier, probably around October. But I first started investing in Bitcoin because obviously that was the big one, right, at the time. It has since doubled, right? So when I first started investing in Bitcoin, it was about $22,000. Now it's around $39,000, so it's almost doubled, and it's growing every day. And then I also had invested in Ethereum, which is the second largest one, right? Second largest cryptocurrency out there, second largest, most popular one. And Ethereum, when I first started investing in it, I decided that I was just going to buy a full coin. And at the time, the Ethereum coin was $350. I just bought one, and I threw, $75 here and there towards Ethereum. Now, today, Ethereum was at around $1,200. And I'll talk to you a little bit about how to invest in cryptocurrency, at least how I've learned how to do it, how I'm keeping myself safe. There are hackers everywhere that are trying to steal your coins all the time, right? And there you have it. So you guys got kind of an understanding of what I'm working with, right? So now you know exactly what I am bringing in, how much I am using for paying bills, and how much I have to that's kind of left over to allow for me to uh, make payments on various things, or take my family out, or do anything fun or exciting, or also just to have money that is emergency money in case something comes up. Okay. Again, next video will probably be coming next week. I actually get paid next week, so yeah. I'll show you guys what I'm looking at in investing. I'll actually probably just put the camera, if I can't figure out the screen sharing thing by then, I'll probably just put the camera on my computer and let you guys just watch as I actually go through and pick different stocks to either invest in, or I'll just put money in my investment account. But I'll definitely be buying some more cryptocurrency, so I'll show you guys what I'm doing for that as well. Okay, until next time, thank you guys. Now we have that beginning. Now let's go ahead and let's start working on the middle and see if we can grow this bad boy. All right, your boy Broken Finances, and no, I'm not gonna do that. I'll come up with my own thing. Everybody else has been doing that kind of a deal. Peace.